For those of you who can see the screen, this was a demonstration that we did with a professional sports organization sometime back at the tail end of last season. As a quick example of what we do, normally this entrance would be protected by 12 walk-through metal detectors, the very traditional metal detectors that we're all familiar with when we go through the airports or when we go to sports stadiums. Now, for this demonstration, what the team did was they removed 6 of those walk-through metal detectors on the right of this white line here, or the white chain, and they left 6 on the left. And I'd invite you to keep your eyes on this gentleman in the North Face hoodie. One single lane of the Xtract One Smart Gateway was placed here. Our solution is a weapons detection solution, not a metal detector. And I use the words metal and weapons intentionally. We use purpose-built sensors, as well as with AI software to detect when people walk through exactly what they have on them, and to the best of our ability to discern, is this a knife? Is this a gun? Is this a cell phone? Is this some other benign object? I can run the video and let people have a little bit of an experience about what it is working with Xtract One and what that experience looks like. So as you can see here, the people on the left carrying their purses, their clutch purses, small light backpacks, jackets and whatnot, they just walk in one at a time. Now this was a demo, so this is normally a slower pace than normal. And we have a gentleman about to walk through here with a blue shirt, and the system here detects that he actually, in fact, I was at this event, has a knife in his right front pocket. The system will actually identify who the individual is. It'll take their picture, and we have the ability, whether displayed on this tablet, as you can see here on the screen on the towers, or to a separate tablet or a smartphone that's co-located or anywhere within the building, the actual location of the weapon on the body. In this case, we are running over 29 seconds, about 19 people. If you fast forward through this, about 19 people walk through in that 30-second period. And the gentleman on the left here, waiting for any one of 6 walk-through metal detectors, has not moved a step. So we at Xtract One are in the business of digitally disrupting what has historically been a labor-based physical security marketplace to allow people to have a fantastic guest experience when they enter into a venue and not have to wait a long time, at the same time catching the broadest set of weapons. Now, why do investors look at us as a potential investment opportunity? There's a number of reasons for that, and I'm going to hit these headlines and then we'll go into a little bit of detail. The first is, as I said, we're digitally disrupting an existing marketplace where billions of dollars are being spent to protect venues like Madison Square Garden and Radio City as an example, or schools. As a company, we've got strong revenue growth and backlog. Fiscal 2022 was a 370% growth over fiscal 2021. And 2023 was another 250% growth over 2022. That trajectory and that vector that we're on as a company is not going away, primarily because we're playing into a marketplace that's only getting worse, it's only getting larger, and it's got a global opportunity for it. And again, our unique capabilities allow us to serve not only the domestic markets, but the global market very well. The nice thing about our business model too is we've set it up in a manner that we can serve the customer in the way they wish to be served. Some organizations wish to pay us an upfront model, but the bulk of our customers are looking to buy security as a service and benefit for the continuous innovation that we're providing to them. So we have a predictable revenue model with a lot of SaaS recurring revenues. Most importantly to me though, is we've got key customer wins and we have a compelling ROI for not only our customers, but a great experience for our customers' customers. A brief smattering of who some of those customers are, those that we've publicly announced. We're not able to announce every customer because, quite frankly, this is security and many of them have a no announcement policy around publication of security strategies in order to keep the venues safe and protected. We're very pleased, though, that organizations like Madison Square Garden, the Chicago Theater, the Sphere in Las Vegas, the KC Current, which is a purpose-built sports stadium, soccer stadium for women's soccer, the first of its kind. Total Mortgage Arena in Connecticut, and many, many other arenas, such as the Florida Panthers and all of their properties, are now customers of Xtract One. On the other side, with the expansion of marketplaces now contributing more than 50% of our pipeline and our revenues, we're seeing ourselves in health organizations like Community Health Network out of Indianapolis, Centera Healthcare, the largest not-for-profit healthcare organization in the Eastern U.S., organizations like Kia, Hyundai, the Veterans Admin Hospital, Co-op Live Arena, the largest arena in Western Europe. We're very pleased with the growth of the business. We're very pleased with validation by these well-known, solid professional organizations. In terms of OpEx efficiencies, one of my favorite case studies is with one of the arenas. This arena had 42 walk-through metal detectors, 85 security staff to run those for 250 plus events every year. Their overall spending on security staff salaries was about $2 million per year. Replacing that with a smart gateway solution, about 9 systems overall, and about 30 security staff, they've lowered their security staff spending from about $2 million a year to around $600,000. Now, they have to pay us, but let's, for argument's sake, assume that they're taking $1 million of what would have been OpEx costs, and they're pushing that now to the bottom line as EBITDA. More importantly, though, what we're finding is in that scenario, with the number of systems they've deployed, the average fan is into the arena in about half the time they were previously, and you don't have the backlog and the traffic jam of people. So the lines are much shorter and people flow right in. And then finally, we've seen in most of these arenas where we've deployed, we're able to start tracking the increased revenue from people being inside. And while not everyone will buy more beer or pretzels or hot dogs when they get into a stadium, what we're finding is on average, the average person spends more than $5. And so if you think of 17,000 fans going to 250 events per year multiplied by 5, multi-million dollars increases in revenues. We're essentially doubling our business every year. Where we may have had 40 plus customers a year ago, we're now in excess of 100 customers. And we might have had $1 million of backlog. We're in excess of almost approaching $30 million of backlog. And while we're seeing this doubling and tripling of top line every year, we've been doing so while keeping OpEx generally flat. Over the first 2-3 years, between 2001 to 2003, we actually declined and drew down our OpEx by about 5%. We will continue to invest, and we do see OpEx increasing, probably range single digits per year. So simple math, OpEx grows at single digits per year. Top line is doubling and tripling, and while we're throwing off, let's call it mid-60s GP. That shows a very profitable opportunity for us, a very scalable business model that we've been able to put in place, and we see that as a simple equation that anyone can do that starts to lead us towards cash flow break even.
Thank you. And when do you anticipate to turn profitable?
Well, that really depends. We've not given specific physical guidance or detailed guidance on that. If you do the math, could I see that occurring within a 12-month period? Potentially. However, this is a very fast-growing marketplace, and we've got customers who are putting great ideas in front of us about things they would like to do that'll make us unique and specific to their vertical marketplace. So we will judiciously, as we have before, continue to invest if we see there's an opportunity for accelerated growth and accelerated return of shareholder value. So that could push out that cash flow break-even period, but right now, the math tells us that that's probably something that could happen within the fiscal year.
And then we do have another question. Where do you stand regarding capacity and your ability to deliver on backlog?
Well, right now, I'm very pleased that about a year ago, we put an objective in front of us to double the capacity of manufacturing by January, and then double it again by July, which has just passed. We've completely hit those targets and, in fact, exceeded those targets, delivering that capacity growth ahead of plan based on the demand that we are seeing from customers. The nice thing about this is we're really only running one shift. So if I wanted to double capacity again, I just need to add another shift to the existing manufacturing line. So we've got a lot of flexibility in terms of growth.
Can you also talk about your margin, gross margin opportunity?
Well, right now we're sitting sort of 60 to 65% gross margin. That will vary slightly depending on the nature of the contracts with the customer. But where I see the gross margin opportunity presenting itself is, as I mentioned earlier, we have various vertical markets coming to us and asking for vertical market specific capabilities that sit on top of the platform so they can do more as that person enters the door. A simple example, can I also verify that this is the worker who's supposed to be coming here and they don't have a weapon in one step versus two that they currently do? We can deliver that software on top of our platform fairly easily. It's very extensible. All that will be delivered as software that stacks on top of the existing revenue streams from those customers. And that's going to create more and more high profit, which I think is just going to drive the gross profitability up overall as we deliver more of that software value.
Thank you. And given your current momentum, how do your current deals differ from your past ones? Are they like more significant or longer term?
I would add to that as well, Peter. I agree completely that we've definitely seen an increase in the size of the deals that we've had over the last couple of years. We're also seeing a lot of repeat business where customers have come back and said, we've got the ConOps right, we're happy with the install, now we want to do these other 3 locations. And so what we're finding is that a big part of our sales funnel and our backlog consists of customers that are coming back for repeat business.
Second key point, very pleased to say that after 3 years of delivering the Smart Gateway, some of those contracts are coming up for renewal. 100% of our customers are renewing and expanding business with us.